it's very attractive or very sexy for us to find the secret formula, right? But I can tell you there's no secret formula. Look at it holistically. And most importantly, you've got to be logical and sensible about it. So you've got to have a bit of business sense. Now, I've come across many people who say, hey, I don't know how to run business, so how can I invest? Actually, you should look at it from the other way. We are in a much better position than the businessman. You know why? Because
before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free. Okay guys, welcome back to the podcast, this edition. Today we have I like to say that you are someone I know exists, but we only got acquainted very, very recently only.
yes.
And we have always been in the space. We know we have a lot of mutual connections. And so it's still a bit of a confusion to me as to why only recently we managed to connect. But regardless, welcome to the podcast, Mr. David Poh.
Well, thank you for having me, MJ, and a wonderful team. It's good to be here, finally.
Yes, at long last. I think this is something that even myself don't know. A lot of our guests that we bring on are, people who we know for quite a while already. And so we kind of know their story, but we want to get our listeners to know the story, so we get them to repeat. But in this case, totally fresh for me, very interesting. So before, we always like to talk about, investing and the styles and the philosophy and all that. I always want to know your early years, how were you raised with money?
Well, to start off, I didn't start off with money.
Sure.
This journey was quite colorful for me.
Okay.
I was born and raised in a Chinese, we call it 小康之家, means
the new village, right? Is it
a typical family.
Oh, okay.
A nucleus family.
Okay.
Where both parents are working, but they are not financially inclined. So I grew up thinking, having this mindset that money is hard to come by, and investments are pretty risky. I think like most I would call myself Gen X or Gen Y?
Gen X. Are you born before or after 1982?
I was born in 78. So
okay,
you can
so
guess
Gen
my
X,
age.
yeah.
So growing up, investment wasn't really on the table.
Yeah.
On the dining table, right? So my father wanted me to do accounting. Interestingly, because maybe he thought that
it's a safe bet, right?
Yeah, it's a safe bet. But I wanted to pursue music. That was my first passion. I told me that I want to try out orchestral directorship. I said no.
Oh, you want to be the one conducting?
Yeah, because back in high school, I set up the choir. And then in university, I did all sorts of funny things like setting up a quartet, founding the choir for my university, so on and so forth. But then my dad said, you got to choose something more realistic. So I don't want to do accounting then. I don't know why, the rebellion in me. And so I thought maybe let's meet him halfway. So I decided to take engineering.
Wait, how is that halfway?
Because my father works in the telecommunication sector.
Right. Oh, okay,
he has been a technician all his life.
Okay.
All right. So very grounded type of work.
Right.
His technical skills is damn strong. I really have much respect for him. So I said, okay, why not? Since all my friends are doing it as well, right?
Of course.
And then I realized it is the toughest engineering subject in university.
Did you do electrical engineering?
I did electronics engineering, majoring in telecommunications.
Yeah,
now thinking back, right? Oh man, that was I guess, if I could change something back in time, that will probably be something that I want to change.
I don't know as an engineer whether you agree with this. I hear a lot of other engineers also say this, right? The reason E&E is typically the hardest is because when you get your feedback, everything is habis already. I mean, like when something is spoiled, right? You know, it's like a bridge.
Yep.
If you can see a crack,
yes,
you can, you know, civil engineers are basically, you can try and fix it.
Yes.
Right? Mechanical engineering, some of the parts not really working, you can try to fix it. But when you see something not working in
electronics, right,
it's gone.
That's why you need to all the probes. And in electronics and electrical engineering, your mathematics has to be very strong.
It's very theoretical also, right?
Yes. Yeah. And that's where I do not excel mathematics. I think I'm more inclined to the art side, who's trying to prove myself in the engineering world. So you can see the disconnect there, right? But if you ask me whether I regret, I mean, in the whole scheme of things, right? At this moment in time, no. And in fact, I value the experiences and the training that I had from university, moving on to my 10 years career as a telecommunication engineer. In short, we call it RF engineer, radio frequency, because it gave me the foundation and the thinking process that I need, the systematic thinking process to do what I can do today.
Right. Give you a sense of like, why is doing RF like complicated? Because to us it's like, oh, radio law. To us outsiders. Well,
if I put it simply in a very layman's term, in electronics there are two worlds. One is things that you can see.
Yes.
So the cables that you can see, right?
Yeah.
The fiber optics you can see, right? RF is in the air. So it's invisible. How do you know that the mobile phone that you're holding now is connected to a base station somewhere around the area, right?
And how does it know which one is DG, which one is Maxis?
So this is in the realm of electromagnetics engineering, and in that realm, mathematics play a huge role.
Right.
And this is not something new, you know. The theory has been around for many decades. It's just that it has reached a certain commercial. The technologies are commercially viable now.
It used to be very expensive.
Right. So I think naturally I'm inclined to, I have a certain affinity towards telecommunications, communications per se. So when I started investing, that's what I look at first. So back to your question, my father played a big role in how I grew up. But up to a certain point, when I realized that, hey, this is not what I want to do, you know. After 10 years working on the engineering field, then when I realized that there are actually a lot of smarter people out there above me.
It's different kind of smart also, right?
Yeah, and I'm not talking...
Not just math and all that,
Yeah, and because the nature of my work required me to travel a lot, I was project-based, so I traveled around the countries, different countries like, from developing countries like Bangladesh, India, Papua New Guinea, to very developed countries like China, Taiwan, Japan, right? Then I realized that this is really not something I want to do.
And sorry, which I assume you were working for a telco?
Yes, I was a contractor.
Okay.
So I was seconded to a lot of different projects.
I see.
Especially when I met a lot of Chinese engineers from China, right? Man,
they're different.
Those guys are smart. And I remember I worked in a Shanghai Bell Lab in Pudong, Shanghai. Almost everybody in the room has either a master or PhD, you know. And I was there with a degree holder. And the reason I was there is because I represent the vendor and I know how to speak Mandarin and English. That's it. You know, and I know that somewhere down the road, they're going to overtake us in terms of language even. Yeah. So to cut the story short, I decided to take the leap, and my mom played a big role.
Okay.
She was the one that, supported me, and she was the one that, she was my first, she was the first portfolio that I managed, so to speak, because she said, hey, David, this is my savings.
Wow.
Please help me manage it. Yeah. So that was where I get the first taste of it.
I see. Yeah. So, but in that 10 years, no investments at all?
Personally, I started, I think, somewhere back in 2006, 2007. I can't remember.
All right.
I wouldn't call it investing. It's basically throwing the darts blindly. because during my projects, I met a lot of engineers,
right,
from Thailand, from Japan, right? I mean, you think that engineers are very serious, right? When they go to the office, put out a laptop, first thing they'll check is their engineering stuff, right?
Yeah, right?
No way, man. Let me tell you the truth. Most of them, or a lot of them that I know in a more intimately,
yeah,
the first thing they look is price chart, technical charts. I used to know this project manager from Japan. All right. He's a very nice guy, but he dabbled a lot in Forex. And that was back in 2000. When was the tsunami year? I think
2004.
2004,
the
right?
Banda Aceh one, right?
Yeah, in Japan.
Yeah.
So I got to know this. Hey, he's a very nice guy, but he really spends most of the time on the screen looking at Forex. So one day he was, hey David, come tonight, I treat you a beer. I just won a Ferrari tonight.
Wow.
Then a couple of days later, he said, oh, I lost that Ferrari again. So it's very volatile, but it got me interested because charts, talk to me. I look, hey, this is very interesting. Maybe something I can do, So after I came back, I started to learn myself.
And sorry, it must have been like really crazy, right? Because maybe you're engineering, you're earning an engineering salary, and usually you guys get paid decent. But when you hear things like, well, I just won a Ferrari literally in those few minutes or days, I think, wow, that's how many years of my
Exactly. And I was kind of junior. I wasn't earning big bucks then. That only came later. But it's something that I really think, hey, maybe this is something I could do as well, So, without having a proper education journey, I just simply took out, read whatever that I can. And my first book was actually on investment, was actually Rich Dad Poor Dad.
That's everyone's first love.
Yeah. But it wasn't enough for me, right?
Yeah.
I ended up taking out technical analysis because it was the easiest route for me. And if you ask any engineer out there, I mean,
the math behind TA is nothing for you guys.
I guess personally, I like patterns. So technical analysis is a lot about patterns, right?
Yeah.
Then after a couple of years, I got hit by I got hit by I think, was it 2001? The 9/11 attack. Yeah, so I think I got my years a bit jumbled up. But there was a time...
That's what bear markets do to you anyway.
Yeah. But that was my first taste of the bear. But my second taste of the bear was in 2008.
Yeah, the big crisis. Yeah.
Man, I guess I lost about 70% of my portfolio then. But being employed, you have this sort of like comfort or buffer zone. You say, hey, never mind now, I can earn it back. So you do not really have that kind of respect or urgency when it comes to your capital, right?
Because it's not like you're a retiree.
Exactly.
You're never going to grow that pie anymore.
Yeah.
Right?
So now I'm a full-time investor. My view on my capital is totally different from then. Yeah. So back then I thought, this technical analysis really, it's not easy, It's not as easy as it looked, right? So I think by chance, I stumbled upon a local, I think our ex-employer, right? So I took up the course, it's called Value Investing, and realized, actually financial analysis is not that complicated.
Yeah.
As long as you know the step 1, 2, 3, 4, 5, right? So I realized, maybe I can do this,
Yeah, definitely.
That is when I met my mentor.
Yeah.
His name is Stanley, and he's still with us.
Right.
He's our advisor in my company now. Right. So I think that was the time where I started on my value investing journey.
Right.
Yeah.
So what caused you to catch this value investing bug specifically? Because there are many different types of investing, right?
Yeah. I think the most fundamental attraction is that it's logical. Right. Because engineers, we think logically, right? So, okay, first step, you just look at a set of, we call it SOP.
Yeah.
So the operating procedure, look at the top line, bottom line. Then I realized they have a catch, operating cash flow. That was very, I thought this is something very complicated to understand, to decipher, right? Then I realized actually it's not. As long as you know how to interpret the numbers, we don't really have to know how to derive those numbers. Those are the responsibilities of the accountants and the auditors, right? So because before that, it was always my mental block there. And that I thought I need to know how to derive those numbers. Well, I mean, it helps for you to know so that you can make sense of things better. But the most important thing is how to tell the story from the numbers.
Yeah.
Right? And that's when it took off. Then that is when I started realizing, actually my portfolios are improving. And that was also the time when I started taking on more family members' portfolio. Like my second portfolio was actually my brother's.
I see.
Yeah. And he was, he needed to consolidate his financials because he was planning to get married. So in a span of 2 to 3 years, I managed to double his portfolio.
Nice.
And I felt good about it. And I realized, maybe this is my calling, because the satisfaction, the fulfillment that you get from that kind of results makes me much more satisfied than when I was working my ass off for my bosses in the engineering companies. Yeah. So in short, that was my journey.
Right. Yeah. And so you discovered this thing called value investing maybe about 10 years ago now? Would it
I think I took my class in 2011 or 2010, I can't remember.
Right. So about 10 years ago.
Yeah. Then it worked for some time until I hit a plateau.
Okay.
Then I realized there's something I needed to get much more, but I couldn't get it from that
style of investing.
Then the style, right? So I needed to venture out, because I realized that actually looking at numbers are not enough. I need to go broader, looking at macro, looking at markets, looking at the industries. And that's why I realized, actually I can marry what I learned from my university and my career into my investment journey, to make sense of things. And I realized, actually Malaysia, because before I was more familiar with investments, right? I'm being like a lot of people out there, we thought that Malaysia is oil producing company, right? And only oil producing oil plantation. Then when you go deeper, then you realize actually Malaysia is also a very important semiconductor player in the world, in the world map. Then when I found that Malaysia exports, the total exports, about 40% of total exports actually came from semiconductors and electrical stuff, right? I said, this is something that I can really bank in on, right? So that was my second phase of my investment journey.
Right.
When I got out of the value investing school of thought and upgraded myself philosophically or mentally.
Right.
Yeah.
So what are some of the other, like specifically that upgrade that you mentioned, that maybe what you had before wasn't sufficient, but now you feel like you're much more equipped?
Okay. Back in the days, when I would say my first schooling was more on quantitative analysis.
I see. Okay.
Right? Then there's the other second school of thought, which is the more qualitative part.
Yeah.
And this quote from Benjamin Graham, Warren Buffett's guru, right?
Yeah.
Stuck with me. He said that in his book, the Security Analysis, he said that investment is most intelligent when it's done business-like.
Yeah.
So investing is really about investing into a business. That's all.
Yeah.
Right. Then it made me realize that actually, other than looking into the numbers, I really need to know what the business is about, what kind of market they are operating in. Right. Who is the management, right? Where do they stand in the whole scheme of things?
Right.
And that's why I realized actually qualitative analysis play a much more important role than the numbers, because the qualitative parts drive those numbers. It's not the other way around.
Of course.
Numbers will speak for themselves eventually.
It's just it's a verification of the numbers of.
Well, numbers will give you a certain aspect of the business, but it couldn't tell you. It won't
everything. Yeah.
It won't tell you how they will do it. It's the management, or at least how the company is run, what business they are in, which industries that they are operating in. That will at least give you a sense of where they are heading to. Because I think you understand, right? Any business has its ups and downs.
Oh yeah.
So at the end of the day, it depends on how well or how I would say forward-looking the management is,
right,
to withstand all these ups and downs.
right.
Yeah. Then that is where I realized that actually we really need to understand. And how do we do that? You've got to go to AGMs, you've got to meet the management, you've got to read a lot of reports.
Yeah.
So most of our time now is not spent on watching the screen for the price or the tick movements. It's really reading reports, and especially industry reports.
As it should be, yeah.
Yeah. So that was, I guess, my second phase.
Right. So I want to learn a little bit more about this because it's very interesting. So one of the starting point of any investor who now maybe read books already, watch videos, watch this podcast, they haven't started yet. One of the big questions they always have is at the beginning of the process, how do you find ideas? How do you generate ideas?
Good question. So we have this thinking model where we look top down first. Then when we look top down means we look at what are the industries that we should be investing at a certain particular phase in the market, because markets are very cyclical, right?
Yeah.
Then from there, after that, then we do a bottom up screening.
Okay.
Let me give you an example. I think semiconductors, right? Semiconductor is so wide, but which segment of the semiconductor value chain that we should be looking at now, right? Where are they the EMS or the OSATs or the equipment players, right? So different phases of the market, different, I would say the market dynamics. Market dynamics has a lot of elements: geopolitics, supply demand, the economic cycle, right? So we need to be a bit more mindful. So after we determine the broader picture,
right,
then we try to filter down. So there's a funneling process,
right,
to see which particular segment that we want to look at. Maybe in a more broader sense for the benefit of listeners, or listeners, right? I think everybody knows that EV is the next big theme now, right?
Correct.
So in the EV value chain, are there any companies in Malaysia that stand to benefit, or are they doing something about it, or how are they related in this mega trend moving forward?
Yeah.
So we do a bottom-up screening after that.
So before the bottom-up screening, right, when you're looking top-down, how do you figure out which areas to go into? One, then the second one is, even if you know like this particular area is going to do well, that doesn't mean that you're in the right part of the cycle to get it.
Definitely.
Right? So yeah, first question first, like what are your sort of criteria to decide which industries?
For that, we don't really have a specific set of criteria. You just have to got to read a lot.
True.
And with social media these days,
plenty,
information is virtually free, right? I mean, I'm not condoning to free stuff. I always think that you have to pay for what you consume, right? There are a lot of subscriptions out there where you can get a lot of research reports, magazines, right? I think Fortune or this Wall Street Journal, right? And you can get a lot of insights from there. You see, we don't really look at analyst reports as our first...
Because there's potentially a bias there, right?
There is a bias, and they have these reports will come, but if you look at the top-down approach first, we have to look at a much bigger, need to have a much wider bird's eye view.
Yeah.
That's where we do a lot, we consume a lot of industry or sector reports. And that's where you realize, that's where you can smell where the capital is flowing to. Let me give you an example. I think with the ESG, these are oncoming of the ESG wave, right? More and more capital is flowing to renewables. Less and less money is flowing into the traditional oil and gas and energy, right? And it's like financing is getting harder and harder for these energy players. So I mean, think about it logically. Let's say we project the future 5-10 years down the road. Which industry, which part of among these two, right? Where do you think the growth is.
Yeah.
Right. Now, don't get me wrong. Doesn't mean that oil and gas will hit rock bottom right away. No, there's an eventual phase. Yeah. But investing is about long-term journey. So you have to decide, okay, if I want to invest for the next 5-10 years, where should I put most of my money at? It's not wrong to put some money energy because of all the dynamics that's happening right now, right? Geopolitics, war, supply demand imbalance, right? It's okay to put some allocations into energy, but for a longer term, much bigger allocation, it should be in something that is growing, right? Instead of shrinking. Yeah. So that is where we start. Then after looking at the these sector reports, and because we only invest in Malaysia, although our research spans global,
right?
Then you've got to be a bit smarter to try to connect the dots to see are there any players in Malaysia, any companies, any manufacturing outfits in Malaysia that actually stand to benefit in this particular trend. I can tell you, actually, when people tell me that there's nothing good to invest in Malaysia, right, they are so wrong, man. They are so wrong. Just go to Penang.
Yeah.
Right?
It's tremendous.
And I'm not just talking about the sexy things like EV, Do you know that actually Penang has a lot of solar manufacturing plants? Not just Penang, my hometown, Kuching. The one of the largest solar players, Long Yi, is there. And the plant is just about less than 10 minutes away from my parents' place. Yeah, so then and for these players to be in Malaysia, they've got to have support. They have got to have an ecosystem that support their industry, right? Their enterprise. Yeah. So that is where our local players come in, equipment players, the outsourced semiconductor services. And that's where you do the bottoms up, because they're definitely a couple, right? So which one has maybe a better advantage against the other players, so to speak?
So now we move to the bottoms up part. So you've got you identified that this is the trend and all that. What would you say are the things you look at for the bottoms up?
Okay, first and foremost, the numbers has to be there.
Okay. Because
that gives you a sense of how well this company has been managed, has been performing over the past few years.
Right. And how far do you usually go back? Some people Buffett like to say he reads, before he bought Bank of America, he read like 50 years or something.
Yeah, you see, we have got to take what Buffett says with a pinch of salt. Not to say that he's wrong.
Yeah.
It's that he operates in a very much different market than what we have here.
Yeah.
Now in America, you have companies that spans across different many decades. Here, if you can have a company that is doing very well for 20 years, I think we can consider very lucky already. Right?
Not only that, even if there are companies like your Sime Darby's and Maybanks that have been around for 40, 50 years, right? Actually, Bursa's website doesn't even go back that far.
Exactly. Yeah. So it's very subjective. We prefer companies that has a much longer history or records, because it gives us more conviction. All right. And companies that can evolve is what we like.
Right.
Yeah. So I think numbers, okay, first and foremost, the financial numbers has to speak for itself. And then secondly, of course, when I say financial numbers, you're talking about the efficiencies, the ratios, all this has to be in place. But they're not the most important, because they don't tell you how well they're going to do, right?
Yeah.
Then secondly, you've got to really try to assess them qualitatively. All right. So we assess the top-down qualitatively first.
Yep.
All right. Then we assess the bottom-up quantitatively first. Then only we look at the qualitative parts.
Okay.
The angles.
Right.
So in that regard, there's no other way but to really meet the management. And how you do that? You go to AGM.
Yeah.
Right. And during AGM, if you get only one opportunity to meet them once a year, right? I mean, make use of that opportunity by engaging them. Ask questions, right? Don't be shy, because if you're shy, the loss is yours, right? And that is where analyst report comes in now, because a lot of these investment bankers, the analysts, the fund managers have access to management. So you can get a lot of insights from the reports as well. Now, when we read those reports, we don't really look at typically things
price
like
targets.
Price targets. We look at the qualitative or even the quantitative information from the report. Like, for example, what's their capacity? What's the utilization rate? What they plan to do. And sometimes you can get a lot of hints, although it may not be so direct. And that's where having a big picture gives you an advantage. Because sometimes the analysts cannot divulge too much information for the fear of, towing the line with the authorities, with the regulators, right? And that's why we realize that having a bird's eye view of the industry gives you a much added advantage to understand the potential even more.
I see.
Yeah. So that's how we. Then of course later on, we have to map this into actionable. In a portfolio, right? So that's another totally different school of thoughts, a process already. That's where allocation, risks, your risk profile, the market timing plays a role as well.
So one of the things about timing is, before we talk about like risk management, portfolio management, is valuations. So this is like this debate among investors is never ending. How would you describe your way of
our view on valuation, right?
Yeah.
If I put it simply, valuation is very subjective. We got to have a model to work with that is granted. So you got to come out with a valuation model of your own. All right. So different investors, different analysts, different fund managers has their own way of looking at it. Have their own ways of deriving at a. I normally try not to use the word, but because Warren Buffett uses it, so I guess for the lack of a better word, intrinsic value, right? Why I don't really use that term is because intrinsic value to me is a moving target. Right? Sometimes it will go up, sometimes it will go down, depending on the situation, right? So for us, we tend to look more at what the company's potential are, where they are. Let me give you an example. There's this company called when I first stepped out on my own in 2016, right? One of the first few semiconductor companies that I follow very closely is this company called Getronic. So disclaimer, I'm just sharing my experiences with your listeners, right? It's not a recommendation to buy or sell. And to assess this company on a qualitative angle, right? I realized that this company they evolve in time, Because Getronic used to do a lot of timing devices. When the influx of these smartphones, the telecommunications, right? Timing devices play a huge part. Then when the market becomes too congested, they move on.
Sensors, right? Things like that.
Before sensors, they move on to LEDs.
Correct.
You see? And then because we do because the way we do our research is very deep dive, we try to dig who their customers are. And one of them, the customer,
they go at the fruit company. So we've met the management before, but they like to say fruit company.
Fruit company, but not really that. Actually, one of the companies is involved in LEDs, right? And then from LED, it is a natural jump towards sensors. Because LEDs and sensors, so that is where my engineering background plays a huge advantage, right? Physically, the device is the same. LEDs, right? Light emitting diodes. But the way they are being used, applied, is different, right? So one is used for illuminate light. Sensors is to capture the sensory or the environmental signals.
Whether it's distance or temperature
or pressure, and convert it to electrical signals. And that's where, and this is applied to, a lot of huge myriad applications, from smartphones to machines to automotive. Right. And then actually this company really evolves over time. So they are not just static there. But unfortunately, So this is the but part already. In the past couple of years, we realized that they have been plateauing. They're not really growing, and we can't really get much from the annual reports or from the recent analyst reports as well, right? And then COVID hit. We didn't really had any opportunity to engage with the management. But recently, based on from their latest annual report, we realized that actually they are venturing into EV related like ADAS, advanced driver assisted systems, and that sparked our interest again. So we're trying to engage with the management to understand what they have been doing in the past few years, and to try to extrapolate what kind of future they will have. Yeah. So I'm sorry I can't give you a very clear step-by-step process of what we do. And to be honest, if I were to give you another case study, right, the process could be totally different. Yeah. But at the end of the day, you realize that we really look at it from a business angle. Yeah. Right. We try to evaluate the management's actions. Yeah. For example, is the management actions aligned with ours as a shareholder? Do we believe that they are creating more shareholders value in the future? Yeah. Or they are doing something stupid? Yeah. Like buying more land for whatever purpose, for property development.
Rights issue, things like that. A lot of rights issue.
Rights issue is not necessarily a bad thing, depending on what they plan to do with the capital that they want to raise.
And when they do the rights issue. So like,
because think about it. If you are the managing director or director of a listed company, right? And during the pandemic, the regulator relaxed the rules for you to raise money, right? I mean, as a businessman, would you want to take this opportunity? I know I would, right? So we always have to think of it, evaluate any situation from a businessman's angle.
And the exact business that they're in.
Correct. Yeah. Then later on, you had to track what did they do with those money they raised. And that is important.
Fair enough.
But these things take time.
Yeah. Yeah, I guess valuation is not as easy as buy below PE of 10.
Well, for starters, for beginners, I think it's a good model to follow through, to use. But I can guarantee you, as along your journey over time, you realize that there is something that you're not seeing from that particular I would say
it's one angle. It's just one angle.
It's one angle. And in investment, right, one of our philosophy is never base your investment decision based on one particular metric, be it quantitative or qualitative. Because we subscribe to George Soros' theory of reflexivity in our spiral thinking model, right? And one of it is that it's almost impossible to ascertain absolute truth. Yeah. Why? Because you see, when it comes to science, right, objectivity, right, you need to have a lot of proofs to prove that it is right. Yeah. But you only need one falsifying statement or one falsifying proof to make the whole thing collapse.
Correct.
Yeah. So coming back, looking from that point of view into whatever valuation model or metric that you use in your investment decision, right? Always take it with a pinch of salt and always question. Never stop questioning. I say when I was dabbling with TA, right, I always look for things that I think is right. Because you tend to want to look at things that fortify your action, right? But in investing in proper investment, right, we always look for things that may go wrong. Maybe we have overlooked certain aspects of the business. And if you ask me, right, what are my failures or...
We'll get to that. Hold on.
I can tell you we have loads of them.
Yeah, we'll get to that, your successes and failures. But just before that, I think the last bit, which I think a lot of investors don't spend enough time thinking, mostly because maybe they don't go in with that mindset of, well, I have to treat my investments almost like a business, right? Like I have to create systems and all that. One of the big things I always believe is the importance of risk management and portfolio management. I think that even if you are an okay stock picker, if your risk management and all that is pretty good, right?
Yeah.
You are likely to outperform actually.
Over time.
That is my view lah. So, how do you see like risk management, right? Do you, like, some people say risk management is like stop loss, having stop losses. Some people say like it's allocation. Some people say it's, you need to diversify across different industries. How do you look at all this?
It's, to answer that question, you have to see the personality of the investor. So what I'm going to share next to answer your question is purely based on my personality and my characteristics, right? And my and my risk appetite. To be honest, I'm a risk taker.
Okay.
Why? Because I quit my job as an engineer, right? And to go full time as investing. So definitely in my DNA, I'm a risk taker. So, but to be able to take on risk, you have to take on risk in a smart way. You can't just take on risk blindly, right? So as a rule of thumb, I think most of your guests has also touched on this topic as well. It's all about allocation.
Right.
Right. So, and allocation goes both ways. Let me give you an example. If, for us, a rule of thumb is if you want to go more than 15-20%, right, there has got to be a very good reason for you. And that would include fundamental reasons, fundamental angles, qualitative angles, the macro, as well as timing. We can't escape from that. Because we are full-time investors, we can't afford to just look at purely bank in on value and wait for the market to realize. Because, I mean, if you are not a full-time investor, you have the luxury to wait. But for myself and my team, we are all full-time investors. We can't.
A bad year means, eating.
Correct. So like this, it was a bad year for us. Most of our portfolios, our own portfolios were down between 8%. And one point in time, it was down 20%. I think a lot of people are experiencing that as well, right? So coming back to the risk management, right? To us, allocation is first and foremost very important. But allocation is not a fixed metric as well. It actually should be flexible. For example, when let's say you decided to say, hey, this is a good company, so I think I can allocate 10%. Are you going to go 10% right away?
Yeah, you probably want to take it slow.
You can, because if it goes up right away, 20%, wow, you feel like you are the smartest people in the room, right? But what if it goes the other way? Right? If you have 10% right away invested and the stock is down 20%, that's 2% to your portfolio bottom line. And just to break even, you need to make back that 2% before you can actually create gain more profits, right? But on the other end of the spectrum, if you under allocate in a rising, when the thematic is rising, right? Then what's the point when you spend so much time to go deep dive into a particular industry, into a particular business company, spending so much time to understand the management, then you allocate 5%. Because the stock can go up 10, 20, 50%, but the effect to your portfolio is could be minimal or negligible. So it has got to be a moving target again, depending on a lot of factors. So here is where I divulge from where my first phase of my investment journey, where I don't look at technical market. Sometimes timing plays a role here, because that will gives you an edge. And that is why, because I'm not good at timing the market. That's why I have a team in Spiral Thinker to we spar ideas a lot. And in my team, there are 2 or 3 members who are very good in reading the market. So I rely, I leverage on their knowledge, right? Yeah. And that's why the concept of alliance is very important, because investment, you can't do it alone. You've got to gather your own like-minded people, right? The people that share the same value as you do, right? So again, sorry, it's an answer. It's a huge circle back to your question. So allocation, and allocation should be flexible. But if you decide to go more than what you're comfortable with, so your comfort level could be 20%. Yeah. Mine could be 40%. Yeah. You see what I mean? You got to have very good reasons why you decided to push your allocation beyond your what you think is normal.
Yeah.
For example, back in 2020, we had actually at one point in time, we had 60% invested in glove stocks. But we were even late in the game, because all of us were skeptical, with the numbers, with the projections that the management gave, right? But after we gather all the information, all the data, the information, we even had our own in-house analysis. We say, hey, this is a chance of a lifetime. If we're going to take only 20%, right? That's not, because our portfolio was down so much back in March 2020, right?
I remember.
So I
remember mine was like down like a third or something.
Correct.
Like that.
So the other perspective of risk management is also the reward.
Yeah.
Because if your portfolio has been down, say, 30% for the year, you've got to know, with the balance capital that you have in the portfolio, right? How much more risk do you need to take
to make back?
For you to make back. Break even first. I'm not talking about making money yet, right? But of course, by doing so, you are taking more risk. So you've got to be really careful and really cautious at what you do. You've got to really explore all angles.
Yeah.
Yeah. So that is where market timing plays a role. When I say market timing, it's not really about just looking at charts. To me personally, charts is a manifestation of market psychology.
Yeah.
Simple as that. If you just treat charts that way, you can actually benefit from technical analysis.
Yeah.
And that time, we know that actually the momentum of the glove stocks will really, I would say, quite unbelievable, because there are a lot of new players coming in, And then analysts were like in a race to see who will give the higher price targets. Remember the glove mania? Then so we decided to take, in terms of timing, we say this is the right time to go into this sector. So we bank in hard. But I think we only hold our allocation for less than 3 months.
Right.
Yeah, because the dynamics, even if you factor in the future growth, right, it's just crazy. I'm not sure if you remember what was the PE of some of the glove stocks. 120 times. So to us, that is like, doesn't make sense already.
Yeah.
Didn't make sense. So we decided to take profits. In fact, before the end of 2020, we were zero invested in glove stocks. We took our profits, we plowed it into technology. Yeah. So this is where, based on, what we do, how we allocate portfolio, how we allocate our capital is really about thematics.
Yeah.
Yeah. We seek value, but we look at themes.
Fair enough.
Yeah.
So, that's very interesting. We'll talk a little bit about how you look going forward now. But what was the theme this year, and also like going 2023. But before that, let's talk a little bit about some of your home runs and some of your not so home runs. Okay. So what would you say are some of the best investments, monetary investment? Every time I ask this question, people say, "Oh, does my daughter count?" They always say things like that. But I'm talking about monetary investments that you've made.
I can talk about one particular one that will cater for one of our biggest wins and our biggest losses.
Interesting. Okay.
So you see, investing is really very flexible. When you thought that you are right, sometimes the market can whip your backside and prove you wrong. So this particular investment we've been following since many years ago was AirAsia.
Okay. Yeah. Okay. I know.
Back in 2014, right? That was my first exposure to AirAsia. The stock took a dive, man. About I think more than 60-70% in less than 4 months because of a short sellers report. The short seller was based in Hong Kong called GMT. Yeah. They accused AirAsia of fraudulent accounting. So back in the day, I was still very much focused on quantitative, right? So we look at the numbers, we look at the balance sheet. Doesn't make sense.
Only the thing is maybe the debt only a bit
exactly,
high.
But it is how the aviation industry's the accounting was, So to us, that's not a big flag. And then, with the cash flow and everything, to us, it's like, hey, this is an opportunity of a lifetime. I remember that, I mean, I was invited to a Telegram group then. So I was, always, singing about how great AirAsia was, and that, cheap flights is the future, is a trend. So I remember the stock dive from about $2 to over more than 2 ringgit all the way to 70, 80 cents. So my last buy was 79 cents. I didn't manage to catch bottom. Then it rebounded back up. So that was my first catch, right? Thick confidence level, up one level, right? Second catch was during, I think, 2018. When they start to try to rationalize their business model. Because as a value-seeking investor, right, we do not like capital-intensive businesses, just like Warren Buffett. We prefer businesses that are as light as possible in terms of their capital expenditure requirements. But of course, to be realistic, not all businesses are like that.
And some businesses that actually spend a lot on capex actually do a lot better.
Yeah, exactly. So it depends on what industry you're in.
Yeah.
So in the airline business, everybody knows that it is a very capital-intensive business because you need to buy and maintain your planes. Then Tony Fernandez at AirAsia Management came up with this brilliant idea. Why don't we sell all our planes and list it back? Now, in terms, I mean, this is not a new idea, When it comes to properties, if you talk to a lot of property investors, right, this is something they have been practicing, right? You can. That's where REIT is. That's the concept of REIT, right? So AirAsia is trying to go that route.
Yeah.
And to us, they're like, whoa! They announced in March 2018, stock price move out. Wow, brilliant, man! This is a brilliant move of management. So it took our interest again. Then we decided to look deeper into it. We decided to put our money in, right? Then to cut the story short, it was all the way. Of course, we enjoyed the special dividend.
The big fat one. I think it was like 40% dividend US, you remember?
Yes, and that time the cash flow was the company was netting about 2 billion.
Yeah, it was the peak actually.
Cash flow per year.
It's a decade peak, man.
Exactly, and you're asset light. So we start to be very imaginative of what they can do, And that time was when the management started to talk about fintech. Being a technology company, and that really attracted us. Wow, the management saw us a great dream. To be fair, I mean, in all fairness, I think they would have been able to carry it through, except the fact that COVID happened.
Yeah.
Right. Now, when COVID happened, the first inkling of it happened towards the end of November or December.
Yeah.
But we were so blinded with our investment thesis of the growth of aspects of this company, right? That we didn't really take note, or we don't really put a lot of weightage on this possibility of a black swan event.
Yeah.
Right. But then Chinese New Year happened. I remember I was back in Kuching. I even took AirAsia back. I was so proud of it. Right. Even took all the ancillary.
Nothing's happening. Yeah. Everything's fine. Yeah.
So, but during Chinese New Year, my dad likes to look at Chinese news channels, right? Then shit, it hit on me, My God, this is really happening. So after Chinese Year, we came back. We said, hey, this is not good, man. So we had to bite the bullet and cut and sell off all our AirAsia holdings and take a really huge loss.
Wow.
And we sell at the bottom. So to be fair, investors like us, right? We are not any wizards. We are also human. We are prone. We are susceptible to emotions as well. So that particular journey to us is where we really made a lot of money for the first 2 rounds. And to be honest, I think we gave it back everything on that. Yeah. So that is really, really a eye-opening experience for us. And because of that lesson, right, it really opened my eyes to really, yes, Warren Buffett says, know your company well, forget about the macro. All right. For us, we can't afford to do that because some of the investments that we have interest in are affected by these macro events.
Well, so was Buffett.
Exactly.
right?
So
I mean, he bought like the 4 LCCs in America.
he
right?
got hit as well, right?
Yeah.
So that was a good lesson for us. So I mean, so again, in anyone's investment journey, right? Don't be afraid to make mistakes.
Right.
Try to make your mistakes as early as possible. But the most important thing is, every time you make a mistake, learn from it. Now, if you hit on the wall, but then you just bulldoze through and don't really reflect what went wrong, right? Then it's a wasted journey. Yeah. So where we are today, where I am today, is really a culmination of all these mistakes that we have I would say we have gathered along the way.
Yeah.
Yeah.
So I mean, since you mentioned that story, I really want to hear one more. Do you have one more? It's so interesting. Some of these.
You mean the failure? Oh,
whichever lah.
A lot.
Success or failure. Maybe one success, one failure. How about that?
Maybe let's talk. Since we talk about failure, right? Let me maybe continue with another story.
Yeah.
So back in 2016 or even 2017, we were very early on when it comes to renewables already. So one of the themes again, so you see the process is the same, top down. Solar is the getting a lot of traction then. Already.
Yeah.
So there's one particular company based in Penang that I started getting my attention, and the numbers were great, because they are from a very traditional business, and this company is called Tek Seng.
You know what? You know what? Now that you mentioned that, right?
Mm-hmm.
I think the first time I met you was Tek Seng AGM. Do you still remember?
You really?
Yeah.
Oh, okay.
We were there also, and I remember they were talking about how
they're trying to diversify.
No. Before that, they were talking about a rights issue.
Yes.
And then the lady gave some, in my estimation, excuse. I said, well, better than taking that. I'm like,
yeah.
Not everybody's instant, So
True.
But so that's actually the first time I met you. I don't know if you remember. It's 2017. It was, and I think a lot of people were excited about it was because it was very cheap, and
exactly
their existing was PVC, right? Remember?
Yes. They were the tika lantai.
Yeah. Also, the thing like when like lorries, let's say if they drive with like some sort of commodity or whatever, then that plastic sheet on top, they were doing that as well, right? So then they were going to solar and
and that really excited me because fundamentally this company is a no-brainer. Their balance sheet was so strong, the management was so conservative. They're so, in Hokkien call it kiasu, right?
Yeah,
kiasi. And then I said, hey, solar, and some more the elderly management, the family members, were actually giving the reign to the young. Yes,
I remember. Yes, the son, right?
The son. And to me, that was revolutionary. So
the future.
So hey, this is good. But again, on hindsight, of course, I can talk about this now, like so smart about it, right? But then I was so blinded with the future they were selling, right? They took on 100 million ringgit investment capex on a new factory.
I remember this. Yeah.
Well, they invested in a solar company in Taiwan. Yeah. I think it was called TS Solar or something like that.
Yep. A lot of memories.
Yeah, and the great thing about it was because Taiwanese companies, they were required to report their revenue every single month. So I could actually track, the associated results. So everything was going well. So they had got a huge, nice plant, new plant in Bukit Minyak. That time, Bukit Minyak is like still still a nobody's, more or less a nobody's land. There were only two companies that I know based in Bukit Minyak. Then one was Sam Engineering. We can talk about Sam later on. The other one was Tek Seng. Then, but one thing again, I really disregarded to my own expense. Was actually the anti-dumping sanction, which was enacted under Obama's administration, because they say, hey, Chinese government is not playing fair. We've got the government is incentivizing all these producers. That's why they are really hurting their own local solar PV producers. So they sanction. So suddenly there's an influx of supply. and this supply has to go somewhere, right? So I mean, to cut the story short, Tek Seng couldn't sell their PV cells, but I could. Again, the ego in me thought, hey, I think they would be able to ride through. But I overestimated the management's ability to ride these challenges. So until at one such point, I cannot take it anymore. I took AirAsia flight to Penang. I remember I rented a car. I think I went to see a friend in Simpang Empat to talk about his portfolio. But then at the same time, after the Simpang Empat trip, I drove past purposely did a detour to go to Bukit Minyak. My God, I remember it was almost lunchtime. Nobody came out from the factory. There were no activities. There were no loading and unloading.
Yeah, wow.
And then I went to the backyard because I checked the refuse, the drainage. Nothing came out. Not even smoke. I know, this is gonna be a white elephant. And 100 million.
ESG compliant.
Exactly. And I mean, I realized that they're really in trouble. Then I went to the other plant, which we were invested as well, Sam Engineering. The business was so, it was so active. Right? They were unloading the nasal beams of the aeroplanes at the back. I was there, like a spy, taking pictures, So this is part of our research process as well. We go on the ground to check, to verify whether what the management say is really happening, is really there or not.
And of course, Sam Engineering shareholders have been recently rewarded.
Yeah. So after that, I told my team, hey, bro, guys, I F up on this investment thesis. We had to throw. So our cost was about 70 cents. I think we throw almost about 40-50% loss.
Wow.
But if we didn't cut loss then, today the price is about 30 over cents.
Yeah.
So I guess we just had to bite the bullet. Again, that was one of the most eye-opening, most valuable lessons that I've learned along the way as well.
Fair enough.
Yeah.
So I mean, stop talking about depressing one. Give me a one that that has done well for you.
Well. So just now, I guess when I was sharing those case studies or stories, right? Yeah. You also realize that actually when we follow a business, we follow them for really a stretch of time. We don't say, hey, today, okay, let's look at this company. Then a few weeks later, we say, okay, let's invest in it. No, that's not what we do. So normally we would, even though we are not, this company may not be in our purview, may not be in our purview to put in our portfolio. We may not have allocation, but because of the industry that they are in, we're interested to know. So we will buy a market share. We will attend AGM. We start to collate our investment, our research, and we actually archive all our findings in our own research database, right? Then we actually had a lot of stuff about Sam Engineering since 2016. We knew that Sam Engineering, they are traditionally doing a lot of hard disk stuff, semiconductor, but they're trying to venture into aerospace. So they've got the management had this $1 billion journey where they want to grow their top line by focusing more on aviation. So that time, again, the same thesis about as AirAsia, but instead of investing into the airline, we investing in a manufacturing supplier. Yeah. So they met Sam Engineering, for your listeners' benefits, right? They produce things like the parts of the wings, the nasal beams that hold the engines, the other prismatic parts as well, and then they sell it to companies like GE. They don't sell it directly to the plane makers like Boeing or Airbus. They sell it to the engineering companies, right? So they were doing very well, and aviation was really taking off, and that's the beauty about investing in Malaysia. Yes, a lot of people say that we are at the bottom of the food chain, no meat already, but we have an advantage. Why? Because you can actually have a foresight of how your companies are doing by looking at the customers they serve.
Yeah.
So at that time, both Boeing and Airbus were coming out with really fantastic outlook of how many planes they want to build to deliver in the next 10, 20 years, you know. And you know, in aviation industry, it's really hard to get qualified.
Yes.
In the supply chain. So once you get it, means you are there for good, unless you really did something wrong, mess up, right?
It's probably even more difficult than automotive qualification, right?
Definitely, because of the safety, the regulations, right, and the safety requirements. So SAM engineering was actually we made quite a lot of money in the first, I would say, investment phase. Then we took profit. Again, we are very thematic. We kind of forget about it, although it's a great company, because one of our biggest issues with SAM was liquidity.
Yeah.
Every time we go to AGM, you know, we try to engage the chairman, who is the agent of Temasek, because SAM is majority owned by Temasek, right? Say, hey, you know, this is a great company, but the problem is liquidity. Then his answer was, you buy from open market, you know. But that time, I think Mr. Tan Teng Boo's fund.
Yes, iCapital.
I think he bought huge stake, right? So they drained out a lot of liquidity from the market. So we decided, great company, but because of liquidity issue, we can't really look at it seriously. We can't really build a meaningful allocation from this. So we decided to put it apart, KIV. Then COVID happened. Again, aviation industry crashed. SAM, as a conduit, as an agent, as a proxy to this, right?
Exactly.
They really got hit badly. But a lot of people forgot about the other part of the business.
The semiconductor.
Semiconductor.
Correct.
They disclosed it already, so I can publicly say this. They were serving people like Teradyne, and many other names.
Yeah.
Right? Huge names in the OSAT and the ATE business, right? Yeah. And we realized then, yes, the aviation part was really bad. They were making a loss. But based on the semiconductor, the technology segment alone, right, it makes the valuation so cheap, you know, single digit PE. And we thought that, hey, this is something really, again, another chance of a lifetime. So one of the technology stocks that we move our allocation to after selling the glove stocks was SAM Engineering. I remember that time the price was about 8 ringgit. And it went all the way to about 20 ringgit in a very short span of time. Yeah. So that was, I think, one of the brighter stories that I can share with you.
Yeah. So, you have quite the history with aeroplanes.
Yeah. The goods and the bads.
Yeah, exactly.
Yeah.
Okay. So, thanks for all the case studies. Now, when you look at, what you've experienced, or that, try and distill for me some of the biggest learning lessons. But also, I want you to give your thoughts on some of the myths that you hear a lot. People use it a lot, but you either disagree or, like I mentioned just now, we talk about Buffett, right? Buffett is famous for a lot of these small little quotes that can be misunderstood. So give me a sense of what you think are the biggest myths in investing.
Well, I've got some notes here.
Oh, fantastic.
Yeah. Again, I guess one of the myths that I would really like to debunk in this is there is no holy grail. Simple as that. There is no one secret formula for you to make it big in investment. Yeah. Right.
I can agree with that.
Yes. There's no one formula. When people tell you, hey, follow me, follow my indicator, follow my style, you make it big. There may be some people who succeed in that way, but I can tell you majority of it will not.
Yeah.
Right? Because you see, you have to understand what investment is.
Yes.
Investment essentially is partaking in an economic activity. Sounds simple? If you invest in Malaysia, in Malaysian market, you're saying, hey, I believe in the outlook of the Malaysian economy. Be it regardless of the sectors, it could be plantation, it could be energy, it could be some financial, it could be semiconductor. Yeah. But you believe in it. That's why you invest in Malaysia. If you don't believe it, why do you invest in Malaysia, right? Then move your money elsewhere, isn't it? So in that regard as well, so if you zoom it down to a more micro level, you have to choose the type of business that you invest in, right? So again, coming back to the philosophy that I talked about just now, right? Investment is most intelligent when it's business-like. So that is very important. So to really appreciate that, you have to look at it as a business and not a ticker, not a number, not a price target that you can achieve out of the blue. Right? You've got to understand what they do. You have to really intimately know your managers. Because as your own portfolio manager, so I have this saying that everyone is his or her own portfolio manager. You are running a business of managing different types of businesses. Simple as that, right? So I know it's very how to say it's very attractive or very sexy for us to find the secret formula, right? But I can tell you there's no secret formula. Look at it holistically, and most importantly, you've got to be logical and sensible about it. So you've got to have a bit of business sense. Now, I've come across many people who say, hey, I don't know how to run business, so how can I invest? Actually, you should look at it from the other way. We are in a much better position than the businessman. You know why? Because if this business I invest in doesn't work,
I can just go away, change.
I can just change, ma. If you're Tony Fernandez, you think you can just quit? No, right? No way, right? So they are stuck there, whether they like it or not. They have got to make it work. But for us investors, I mean, investing is in my company's philosophy, is the best job in the world.
Yeah. Because
you can get to learn a lot of different things. Now, when I first started out, I only know how to look at telcos. So naturally, telco was one of my first few investments, right? And I only invested in one after all my analysis which was digit. And I also invested in time. Then I slowly ventured out into other segments, other sectors, manufacturing, technology, energy, which in my RF days, I know nuts about. Now, I wouldn't say that I know a lot about them, but at least I know enough whether it is worthwhile for me to invest in.
Yeah.
Second myth is there is no get rich quick scheme. Investment is really a process. It's not like there's nothing. Well, you may hit jackpot once in a blue moon. Like I think a lot of people would hit a lot of jackpot back in 2020 or even 2021.
With the gloves especially.
Yeah, come 2022. Right. But so if you do not have that kind of I would say stamina.
Yeah.
Or the mindset to go through it, right? Maybe investment is not, or you've got to really realign your expectations. So give yourself time. Now in investment, I think you also know this, right? The biggest asset that all of us have is actually time.
Yeah.
So it's not your capital. It's not how much return that you can get every year. It's really time.
Yeah.
So really, I will advocate all the young listeners of FIRL to start as early as possible. Make your mistakes as early as possible, because when you're small, you make small mistakes. You don't want to make the same mistakes when you are a few $1 million here.
True.
Yeah, right.
Very, very true. Yeah.
Yeah. So I guess apart than that and the rest of the things that I shared before, I guess two of the myths that I want to really debunk is these two.
Very nice.
There's one, there's no holy grail, and number two, you got to give your investment time.
Yeah.
To really to really comes to fruition.
Yep.
Yeah.
Okay, so last question. We leave this to the last because that's what people probably want to find out the most, is when you look at your sort of top-down process. Obviously, we won't go into individual names, but what are the areas or industry that you are most excited of and why? And then just before that, what do you think of the macro condition today? Because one level above the industries of that we look at is also things like the Federal Reserve, inflation, Ukraine war, Malaysia election, things like that.
I'll give you a teaser first to answer your first question. Then I think I'll talk more about the second question first, because it's all interlinked.
Yeah.
So I would say one particular industry that we look at long-term evergreen is actually technology.
Of course.
Technology is deflationary. Do you know that?
Yes.
Right?
Yes.
I recommend all your readers to read this book by Jeff Booth. It's called The Price of Tomorrow. Brilliant book. what you can do with a handphone today, ordering food, doing banking, doing trading, and all sorts of
Watching this
communication,
video.
right? Compared to the Nokia 3310, 10 years, less than 20 years ago. It's a huge
24-hour battery though.
Exactly. Exactly. And remember those days when, I don't know, maybe you're too young, but I'm not sure. Last time we had to limit our text messages, SMS, to less than 256 characters.
Yeah.
Because each SMS costs 20 cents. And 20 cents that time is a huge...
Yes.
When I share this with my kids, right, they're like, what?
I think my time wasn't 20 cents anymore, but it was
10
probably,
cents, 1 cent.
somewhere like that.
Yeah.
Last time they had like the hot link card. It was 10
Exactly.
ringgit.
And there was a price war.
Yeah.
Right. And
Yeah.
So technology is evergreen because it's always evolving. And if you look at it, the world is moving much faster than we can understand, and technology is moving in leaps and bounds that we can actually follow through. And it is something that we cannot ignore because it will be the core of everything that we do. Because technology really, number one, it is very productive. It increases productivity, and it decreases costs.
Yep.
So it is deflationary by nature.
The TV is a very good example. We were just having a conversation.
Yeah, exactly, right.
Getting cheaper and cheaper, yeah.
TV for
2 something, yeah.
Slightly less than 2,000 ringgit.
Yeah.
To me, it's like a no-brainer. This is like, I think, one of your best value investment decision.
Confirm.
Yeah. So coming back, but technology is not an easy industry to understand. It is very susceptible to a lot of macro factors like economic cycles, supply-demand dynamics, geopolitics, right? And again, so now I would like to bring in the second question that you talk about, Federal Reserve, the interest rate, right? Now, if you are a full-time investor or you are serious about investing, you cannot say you disregard this factor in the whole scheme of things.
Yeah.
Why? Because coming back to the earlier question about valuation is a lot about assumption and it's very subjective. And one of the key components is interest rates. Right? How you derive a certain valuation for different types of industries, especially high growth industries, they are very sensitive to interest rates. It will really skew your valuation model in a big way when interest rates change a little bit. Notwithstanding this kind of magnitude that we look at today,
Yeah.
They mean every meeting they are increasing 75 basis point, 50 basis point. So but you have to look, you cannot look at it in such a narrow vision. I know people are really concerned about what the Federal Reserve will do next. But you have to look at it from a scheme of things, a wider bird's eye view.
Yes.
Whether it's 75 basis point or 50 basis points or 25 basis points next, right? Right now, they only have one mission, which is to kill inflation. And to do that, do you think they are going to suddenly pivot? No, so there's a theme now going on that the Federal Reserve is going to pivot, right? That's going to push the market back up again, right? I don't believe that will happen. Why? Because if you look at so this is where history really play a very important role. We always look back in history, right? So when you study companies, it's based on numbers. And when you look at economy, right, or models, is to really look at what people had done before, right? So back in the 80s, I think everyone would have heard about Volcker.
Yeah.
Volcker was one of the old former Federal Reserve chairman. He also faced the same situation, but of course dynamics were different then. All right. So he really raised the interest rate in a massive way. I think 20%.
Yeah.
And that time, Volcker had a much easier task than Jerome Powell. Why? Because he didn't even need to have a conference to explain why they did that. Just turn it on and let the market, do whatever they want to do, right? But then when they saw the results coming in, when they saw that the inflation were taming, they decided to pull the trigger and go the other way. And what happened after that is inflation spiked back up again. Yeah. So the current Federal Reserve administrations know very well about this. Right? They've already come out many times, right? They say inflation is the number one mission to target now, to tame now. So they are going to keep at it. That's the word he used. Now, I do not believe that. I do not subscribe to the market and this expectation that they will pivot anytime soon. Best case scenario is they're gonna let the interest rate stay on a high. So I think 5% is already a given.
Yeah.
Our biggest fear is they may think that it's not enough. If they raise to 6%, that will really cause pandemonium across the market.
Yeah.
So 5% is, I think, what the market has priced in already. All right. A lot of valuation model will be adjusted now. So this, again, after this, I'm going to talk about bringing all these numbers together. All right. So if that happens, then probably if they were able to stabilize inflation and eventually hit their targeted, they call it the restrictive region, right? They may start looking to relax a little bit towards the end of next year. But that to me is already very optimistic. We are looking at least 2 years to really have a meaningful pivot. Okay, now there is one angle. So I'm not sure, have you heard of this thing called the Davis double play?
No, I have not.
No, right? So there's this very famous, well, it's not as famous as Warren Buffett, but this guy called Shelby Davis. He's also a very good, very significant, very prominent investor back in the day. So he came out with this thing called the Davis double attack, or we call it, we generalize it Davis double play because it can go both ways. So he say that the market sentiment is actually affected by two things. One, the valuation, right? One is the interest rate and one is the earnings stuff.
Yes.
Okay. So just now, whatever I talk about is just the Federal Reserve's actions, the interest rate. Now, when interest rate goes up, market risks tend to go the other way.
Yeah.
Because the capital, again, it's all about capital flow. It's all about liquidity, right? They would tend to flow to less risky assets like bonds, for example. And equities, especially those in the high growth segment, normally will take a hit because investors are willing to take less risk. Back in the day when interest rate was close to zero, right? PE 100 times.
No problem.
No problem, right? It's justifiable. Today, you talk about PE 30, people are going to question, are you sure? Right? So you see, market dynamics play a very important role here. But there is only one angle. The other angle that people may have forgotten at this moment in time is actually the earnings outlook. Now, what the Federal Reserve is doing, trying to tame inflation, is also to bring down employment rate, right? They are actually systematically purposefully trying to increase unemployment rate. That's how they bring down demand, They cannot skew the supply, but they can actually manage the demand side of the curve, right? So what they're trying to do is to create, all their policies right now, the actions is really trying to tame inflation. Is one of them is to really increase the unemployment rate. Now, when that happens, when more and more people
we're already seeing this, right?
Exactly. Consumption is going to go down. When consumption goes down, people lose their jobs because companies are less willing to
savings start to evaporate. Yeah.
Evaporate, and it is a positive feedback loop. All right, and this is going to go on until an equilibrium is achieved, right? And in the process, what do you think is going to happen to the earnings visibility of?
Well, it's not going to be as good because people won't want to hire anymore.
Exactly.
Unless the companies would have done better with fewer staff to begin with.
And don't forget, the Federal Reserve is trying to tame demand as well, to bring down inflation, right? So all this is designed to actually is designed in such a way to really bring down the inflation, and one of them is really through assets prices.
Yeah.
And stock equities is one of the key assets, right?
Yeah.
So with this coming down, do you think that things are, even though the Fed is going to pivot, this is just one small portion of the formula, And I don't think this will happen overnight.
There's only so much they can do.
Exactly. So this is a process that is started by the Federal Reserve, and we can't really blame them for what they did because yes, true, they were very late in the game. You know, they were denying the possibility of inflation really affecting the economy.
But they do have the perfect excuse of, well, it's COVID lah. No one else, no other government has ever had to face COVID.
Yeah, so this
unless you consider what the early 1900s maybe.
Correct. Nobody anticipated COVID, right?
Yeah, yeah.
And if you look at the whole scheme of things, actually everything is interrelated.
Yeah.
The first bulk of inflation came about through the supply side. When during COVID, the pandemic, everything was locked down, right? Yeah, the supply chain was disrupted. So the logistics costs, the manufacturing costs, the raw mat supply all went up. It really cost the next. It really caused inflation to peak. To go up.
Yeah.
Then people also underestimated the pent-up demand when the lockdown was released.
The revenge spending, yeah.
Exactly, the revenge spending. And this is what created the bullwhip effect. Now, so in economics, you need to understand, it's very simple, meaning because of this pent-up demand, right, the supply chain has to react to it. So they were, I think in a layman's term, COVID put out a lot of demand forward. So when the supply chain tried to catch up, when they eventually they realize, hey, actually the demand is not really there.
Yeah.
Right? So in our opinion, this situation is not so easily to be solved. Nobody is to be blamed. But of course, well, the invasion of Russia in Ukraine didn't help because they jack up
but for me, the actually, we just did a video on inflation actually, because recently it has fallen less than people expected, so the market has a mini rally, right? A lot of people forget this, right? A lot of people like to blame Putin because he started it or he made it worse, right? Because he invaded in somewhere in January,
February.
I think when Putin full force invade, the inflation rate was already above 5% already.
Yeah, true. Yeah. So it is something that is going to happen. It's just that he lit he just lit a match in a room full of gas.
Exactly.
But that said, as a person, as a human being, I do not condone to any acts of aggression and any acts of war. That's something very bad. In investment, what we fear the most is not inflation, it's not supply-demand dynamics, it's really about war. Because
nuclear war, yeah.
When war break out, right, everything goes to the drain. Don't talk about valuation. It's really then, right? Even whatever financial asset you have may be worth zero already.
Yeah.
So war is something that as a person, as a human being, I really hope will not happen in this lifetime or in my children's lifetime. But looking at things, looking at how there is a paradigm shift in the world power now, I'm not trying to scare your listeners, but it's something that we have to be mindful about.
Actually, maybe explain. I know it was supposed to be a last question, but since you brought this up, I thought it was quite interesting to touch on.
Yeah.
This. What do you mean by the paradigm shifting?
Because this kind of things has happened before. Back before World War II broke out, a lot of actually we can actually derive a lot of analogy from what is happening now to then. Inflation, price war, tariffs, Smoot and Hawley Act. Then this nationalism. It started with Trump. Trump is not he is not the reason that it happened, but he is one of the instigators.
He took advantage of it.
Yeah. Correct. And suddenly everything can be nationalized. Everything is a concern, it's a national security concern already if you talk about technology, I can understand, but we talk about your food supply. But if you think about it, it's true also. And that's why China is always, they are very forward looking. They understand the risk and they know that they have to look forward, anticipate, their supply of all this food may be under threat.
Raw materials as well.
Exactly. That's why they went all out to procure a lot of all this raw mat and this food and since the pandemic, So this situation, right? After reading Ray Dalio's, after reading a lot of opinion pieces by a lot of these prominent economists, right? I think it's something that is inevitable unless everybody comes to the same table and talk things through. If things just go as it is, business as usual, you know, Cold War, Russia, Ukraine, China. Actually, China and US is the biggest threat right now. The diplomacy is really deteriorating at a much faster rate, even compared to Trump's time, right? So if this were to happen, right, and I think eventually somebody is going to be trigger happy to, you know, to order the don't know what action that may trigger a chain of effects. And that was how World War II started. It's not because somebody started to bomb. It's actually from a very small incident. I think it was some assassination.
World War One, you mean?
Sorry, World War One.
Yes.
Thank you. Sorry about that. Yeah. So in this regard, Taiwan plays a very important role.
TSMC to be specific.
Yes. Again, it comes to technology again. Right. So I can understand the insecurity the Americans are feeling. If I were the Americans, right, I would be doing the same thing. Hey, heck, I have all these high tech, you know, things from my communications devices all the way to my military, arsenals, right? And most of them actually the
rely on
most fundamental parts
chips,
are manufactured in Taiwan, which is a People's Republic nation. So they've got to be the aggregator here, the aggravator here, right? And China being China, you know, they have got this dream of reunification. I mean, so it's a case of two giants fighting against each other, each having their own values and priorities, and all of us around are gonna get hit as well. Right. So I think what they are doing now is right. A lot of these technology companies are actually diversifying away. Right. So a lot of them are actually started moving out of China a couple of years ago already, since the Trump's time.
Even here as well.
Exactly. And that we always believe in any crisis, there's always opportunities. Crisis begets opportunities, right? So because of that, geopolitical these are threats happening, a lot of suppliers, manufacturers are moving out from this I would say ground zero regions, right? China, these are Taiwan. Actually, there's an opportunity for us, for countries like Malaysia or even Southeast Asia, because as long as we are deemed neutral, right? We are like the girlfriend that both sides want to befriend now. So as long as we carry on the right policies, as well as we carry on these diplomatic ties properly in a proper way, I think we should benefit from it. Case in point, sorry about that. A lot of automotive players are moving out from China and Taiwan. Do you know that? From the latest VTROX briefing that I attended, a lot of these plants are moving to countries like Mexico. Do you know that Mexico, over 90% of the exports of automobiles actually goes to US? So they are a very important automobile hub for US. And a lot of these manufacturers, automobile players are moving there. So ATE players like VTROX or whichever company in Malaysia that has exposure to that kind of market will stand to benefit. And that is where, again, top down, we look at top down, we smell where the money is going, we smell where the opportunities are, then we see whether are there any companies in Malaysia that stand to benefit from this. And if there is, how probable are they going to capture this opportunity and how sustainable it's going to be?
Fair enough.
Why I say this, why I add the last bit about sustainability, because again, we are at the bottom of the food chain, right? So a lot of our companies, I mean, being Malaysian, I'm very proud of a lot of companies that is homebred, homegrown, right? But if you talk to a lot of these people who are very used to the global scale, right? They say we are nothing but dignified, overqualified contract manufacturing. Which is technically not wrong. So we've got to understand whatever opportunity that our businesses capture, right? How sustainable are they? And that is one of the lessons that I didn't share again in this session because a few of the companies I invested early on was having this contract contract manufacturing or CM mindset, and their fate really is tied very much to their principal.
Yeah.
So in the principal were to cut off orders from them, that's it for them. So this is something
know a
that
lot of the EMS guys
exactly
in that area.
So being invested in Malaysia, this is something that we've really got to pay attention to.
Yeah. I mean, speaking of Malaysia, I mean, just I think a week ago, the Bank Negara came out with reports on our GDP. It's like crazy good. Like I saw, it's like wow. Which of course it runs contrary to the narrative that we're hearing, especially now election season's coming up.
Yeah,
so, Malaysia very bad. Ringgit this, ringgit that. Why do you have faith in Malaysia?
I guess it is a personal decision as well. So there is of course some bias, personal bias.
Yeah,
because I choose to stay here. I have a lot of friends who migrated. But thanks to them, thanks to a lot of people that migrated, not just my friends, there are a lot of opportunities here. Again, I subscribe to the mantra of crisis begets opportunities.
Yeah.
And our semiconductor supply chain ecosystem, right, didn't happen overnight. It actually took about close or even more than 20 years since the days when Intel and HP landed on our shores, right? And they train out this first batch of engineers who...
Agilent guys.
Agilent guys who... I mean, there are bound to be enterprising people, like all the CEOs and the founders of the semicon and technology companies listed in Malaysia today, right? Without... If this Western... the leaders of the market didn't come to Malaysia, we wouldn't have benefited from the technology transfer as well, right? And for now... although we are at the bottom of the food chain, right, it is still something that the entry barrier is still quite high.
Yeah.
I believe that we still have the capacity as well as the foresight, all right, to capture this trend moving forward. Yeah. But this is where government stability comes into play. Because if you do not have a stable government, then you cannot enact policies that will actually benefit from, I mean, to help these enterprises, these industry players to capture this. I mean, case in point, you can give tax incentives, you can give a lot of grants, right, to help the local players. One of the key major challenges or the common challenges that I kind of gathered from talking to a lot of all these management of these listed companies, right, is actually the drain of talent. Yeah. Brain drain. Yeah. It's getting very tough for them to hire engineers. Hire is one problem. Keeping them is also another challenge. Why? Because you get all these MNCs like Intel, Lam Research coming to your home ground, you know, and poaching all these engineers. So
how to say no, right?
And they're paying, I don't know, paying in US dollars, same amount. But so what can you incentivize them to stay? Stock options? Selling dreams. Yeah. So I think this is a huge challenge. And unfortunately, this is where education policies play a huge role as well. I'm quite sad to say that I think this is my personal opinion that our education policy has been going nowhere since my time, since I was a kid. Yeah. If they had done well, if it had really been serious about it and you know, carrying on or enacting a very coherent education policy since then, right, until now, I think we should have a lot more talents going into the market compared to what we are seeing now. A lot of good people are actually being poached out of Malaysia or even out, I mean, to MNCs rather than serving our... Yeah,
there's something like 1.5 or 2 million Malaysians outside of Malaysia.
Yeah, I don't know the number. Yeah. I don't follow the stats, but I just look at my friends. I've got friends, I just realized from my high school, you know, who are aeronautics experts working in GE, based in Japan. Yeah. I've got a friend who is a professor in mathematics. I don't know what was his expertise, but to me, wow, imagine if they were to stay in Malaysia and work to improve. And ironically, do you know that Malaysia really started venturing into technology, semicon, almost at the same time as Taiwan and South Korea? Yeah. But where we are today compared to them. So this is something that we've got to fix. Now, I don't know whether we'll be able to fix it in this generation, but if we do not, then again, like you said, I may change my view of Malaysians' outlook.
Yeah.
I hope that do not happen. I'm still optimistic. Being an investor, right, you've got to be optimistic.
Yeah.
If you're not optimistic, maybe you probably won't be investing. Yeah. So I choose to look at it, but of course, I'll be following through. I hope that the Malaysian public in general can see this in long-term view. I mean, in longer-term view, rather than just trying to get out of the country as fast as they can. But we need talent to stay in the country to build the future together. Because otherwise, when there's no future, there's no investment opportunities already. Remember what I said? Investment is partaking in a country's economic growth.
Yes.
So if there's no economic growth, that's it.
Yeah.
Yeah.
Which makes it all the more surprising how well we've actually bounced back up since COVID.
Yeah. Again, so you mentioned rightly so that because this is election season, so one sparrow will not make
of course
a summer, right? Or spring. I can't remember the word. I mean the phrase. So I will be looking at maybe the next report then to gauge whether how sustainable this is. Yeah. But again, even when the numbers are not great, right? Trust me, on the micro level, there will be companies, there will be maybe a certain segment, a niche market in a certain industry or sector that is worthy of investment.
Fair enough. All right, David. Look, it's been an excellent conversation. I believe this is your first podcast ever.
Yeah, it's my first podcast, so please forgive me.
Yes.
If I'm not as articulate as your other guests.
It's okay, you did well. Yeah. Definitely there are guests who are not as articulate as you. I will not name them, but
I feel that there are a lot of topics that we can dive even deeper. Yeah. Probably in the future we can have more sessions like this to benefit 100%. Your listeners. Yeah. So thank you for having us.
Yeah, you know what? If someone wants to follow you or to connect with you, how do they do it?
Well, I am not particularly active in social media.
Sure.
Because being a father of 5.
5? Oh, yes. Yeah. I didn't ask you about your family. Okay, 5. Wow.
Don't really have much time. Wow. But this is where a strong community plays an important role.
Yeah.
I mostly communicate through our own Facebook. So we've got Spiral Thinker Facebook, we've got Intelligence Investing Facebook, which I don't really update as well. Yeah. So I try to make it as active. I try to be as active as possible in platforms like StockBit. Now, I personally feel that StockBit is a wonderful platform because it is a social community where it gathers not just a lot of followers, but quality participants who really share what they think or their analysis on the platform. And I believe that, this is very different from what I used to follow back in the days, right? Before StockBit came about. When StockBit came about, there are a lot of people who are really serious. You've got industry insiders who share about what they think, what they see. You've got people who really selflessly share their analysis on the particular industry sectors, all right? And really kudos to the management team of StockBit, right?
Yeah.
And I think that they will go very far. And I believe that for your listeners who are fresh or new to investment, right? I think probably StockBit is one of the stopping point that a milestone that you have to go first. It is when from there you can pick up a lot of things. Back in the day, we had to look at forums.
I know which one you're talking about.
Yeah, not before even that something, right? Yeah. I was looking at I'm not sure whether you know the PPH, the public, don't know what boards again, the forums, where everything was so disorganized. Yeah, and even then, I thought that I derived a lot of education, self-learned journey from those. And today, I think the investment community has so much tools and resources available to them. With internet, right? Nothing. We shouldn't use the excuse of I don't know anymore.
Yeah.
Yeah. So that is, I think, something that I can encourage
Final
your
words,
listeners.
yes. Good final words.
So you can find me there. I'll try my best to be more active in those social media platforms. Thank you.
All right, man. Thank you so much for coming on, David. Looking forward to having you in the future for sure. And guys, if you enjoyed the video, remember to give it a like, comment, subscribe, usual stuff. Follow us on our other socials, and we will see you in the next one.